Good morning and hello. I hope that you're all keeping well and keeping safe. So, I don't know why the Zoom recording didn't actually, um, well, I'm sure it recorded, but I'm not sure where the file actually saved. I had a look for it all last night and couldn't find it. But what I'll do, I'll go through everything that was discussed and I'll add more detail as well as we go on. So, the first question that was asked, the main question that was asked was explaining what a breaker structure is and identifying your POIs and OBs. Now, as I mentioned on the call last night, I was fairly disappointed in those questions. Not saying that you shouldn't be asking questions, but I mean, those questions have all been answered um, all within the course. And I don't know if it's my teaching style or whatever it is has made it difficult, but feel free to leave any feedback or drop me a DM if there's anything that I or Ben or James can improve on to make the experience a little bit more easier for you. Because I have tried to simplify it down, but these questions really they shouldn't really be they shouldn't really be asked as such because it's pretty much the basic to understanding how to trade the vertex strategy, and it's not overly complex either. But I'll start off. So in terms of market structure and breaker structure, right? So all you need to look for, and the main things is, so say we've got a bullish trend, right? All you need to look for is a break structure of the high, right? That's all, literally all it is. And as we can see here, let me get rid of this. So as we can see here, right? So we had a very impulsive breaker structure. The last structure from here was this high, yeah? And that's our breaker structure. Um, I won't do a breakdown of this trade as such. Actually, I might as well actually, as I'm here. And if we go to the weekly, and someone asked about where you would start for the trade. So if you go from a weekly and understand what the trend is, so this trend is obviously bullish, and I've just marked out where we can potentially have our points of interest for a sell, right? Because this point of interest created a break structure here. Didn't quite break structure here, but it's still a valid POI. This one's a very clean POI. It's broken this structure and this structure, so it's two structures that have been broken um, that would make this OB valid. So these are potential targets for the long. Now, in terms of the daily, what we can see is very big impulsive structure to the upside. We've broken one structure and two structures. There's two structures that we've broken. We may have broken further structures on the left, but I'm not gonna look that far because I don't need to. I already know it's bullish. Now, for price to continue up, I would expect somewhat of a retracement, but I can't really see any clean point of interest apart from this liquidity wick here. But if we go to the 4 hour, this is when it gets interesting. So there's nothing really um, as of interest here for us to look for where the daily POI actually was. The only POIs we had was this point and this point here. Okay, so I went with the most recent one to see how price reacts. Okay, now in terms of market structure, as I said, we need to look for the previous high, right, which is here, and that's where price broke. So that is our breaker structure. Okay, as you can see, we've got a sort of a wick break here, but for me, that's not a breaker structure. I need to have a clean body break for me to say, okay, that was a breaker structure. Same with down here. Okay, if we're looking at breaking a structure from here, okay, we got an impulsive move. It broke this structure. Okay, then we created a high, but it didn't really break the structure as such. It just wicked. So we came back down, and then we impulsively broke structure. So break structure originated from here and it broke this structure, okay? This structure was originally broken by this wick, however, I don't class that as a break structure, which is why I wouldn't have been looking for a buy here because it was just a wick, so it could just be a fake out. So I'll go into a bit more detail about market structure. So make sure you've watched the market structure video because what I'm about to say is, sorry, I'll turn that off. What I'm about to say is pretty much everything that I've said in that video, the new one. So if you got a bullish market structure, right? Okay, so all we're looking for is a break of the high, right? For us to know if trend is going to change, we need one of these lows to be broken. Okay, that's the only time when we get concerned. Okay, if one of these lows are broken, sorry, not broken. If one of these lows are broken, that's when we start thinking, okay, is this a trend shift? Is it going to go down like that? We don't know. We have to follow what price is showing us. Okay, but until that happens, we are still looking for our bias, which is a buy, right? Let me get rid of all this. Okay, there's no need to overcomplicate it. If you're worrying about, oh bloody hell, what was that? If you're worrying about, you sometimes get this, right? If you're worrying about this, you still got a bullish breaker structure. And remember, in terms of liquidity, all that's done is grab liquidity, and I'll go into that a little bit more detail later on in the video. But it's just grabbed liquidity and gone up, so it's a very clean point of interest sitting here for us to continue the move. Okay, but until we get a noticeable break of structure, that's when we think, okay, trend is potentially changing. Okay, but in terms of break of structure, there isn't really much to it. Okay, you need to find very previous structure. Let's just go in the 1 minute, for example. Just go on a different trade that I haven't marked up. Okay. Right, so if we're looking at breaks of structure, right, I'm just going to focus on this. I'm not looking at for a trade or anything. I'm just looking at structure and see what's broken, right? So we've got a high. We'll start from this high. We've got a high here. The last low was here. Okay, price broke structure, so it's broken this low, and now this is the new low. Yeah, let me mark this out. So we've got the high, we've got the low. Break of structure. This is the new low. Okay, and then these are the 2 points that we're looking for. That's the high and that's the low. We need to wait for one of these to be broken, right? So this low gets broken here. Here. Okay, our most recent high, if we're looking up, okay, is going to be this one, which had just been broken. So now this is our high, which has just now been broken. And if that's our high, our low is here. Okay, you don't need to overcomplicate it. I know I'll probably complicate it a little bit, but I want to show you that these are minor structure breaks. Okay, whatever's happening in between, because you got your swing points, which are these points, right? But these are minor structures in between that you're breaking, because you've broken that from here. Okay, but you don't need to. I wouldn't say don't worry too much about the minor structures as such. The minor structures are more for if you're looking to validate your POI. For example, say that you're inside an OB. Say you're in an OB here, right? Okay, you've got this low, you've got this liquidity grab, price has gone and broken the structure. Okay, this is obviously a minor structure, but it's still broken structure for us to say that this is a valid OB to take. I'm not saying that this is a valid OB because I haven't seen the higher time frame I haven't seen the higher time frame OBs at all. But I'm just saying that this is how you would incorporate the minor structure breaks. Yeah. But in terms of structure, as I said, when you're following a trend, let's just go from the hourly. Let's just clean trend. Yeah. So okay. So if we're looking at a clean trend, right? So this is a bullish one. Okay. We've got our higher lows, higher lows, higher lows, higher lows, higher low, higher low. Yeah. For us to know if price is going to change in trend, we need a break of this structure, this structure, this structure, this structure, or this one. So as you can see, price is just wicked down, but it's not broken structure, it's just wicked, grab liquidity and flow. Okay, that's why we need a clean body break. Okay, we need a clean candle to come and break below this low for us to say, okay, price is potentially shifting in structure. Okay, and in terms of the highs in this point of view, you don't really need to focus on them as such if you're trying to follow a trend, because if that's confusing you, just focus on what needs to be broken for you to change your bias, because obviously our bias here is looking for buys. Okay, we've got our highs that are being created. Okay, these are swing points. Okay, that's your intraday, that's your minor structure break. We've broken that structure, but it's still a structure break, and then you still look for our POI. Okay, but swing points are the main major points, and whatever happens in between is your minor, right? Because you have to remember when you get structure. Oh god, sorry. When you get, say for example, you got a bearish trend, right? This is what you get. Okay, and again, I've mentioned this in the structure video, so watch that a few times. This is clearly a bearish trend, but in between we've got this bullish break of structure, a bullish move. Don't get confused. You have to remember that price needs to retrace at some point. So it has, as retail trader would say, you need to retrace to the whatever fib it is, the 786 fib, whatever fib that people use. I don't really know. I don't use them. But you have to remember that price needs to retrace to these levels. All that price is doing here is enticing people to come in and get taken out, right? Because above every single one of these highs, right, there's liquidity. Okay, and that's what's been happening. Liquidity taken out, liquidity taken out, and the point of interest where we've looked for is here. Okay, and exactly the same concept. If price wicks up, right, it's going to grab liquidity that's sitting above. Okay, and then it comes back down because it's still going to follow the trend. And if it does have a noticeable break, then we can potentially have a bullish move, right? So let me get rid of all this. So those are the questions that we had on breaks of structure. In terms of understanding liquidity, so that was another question that was asked. Now, liquidity, how we utilize it, again, I've mentioned this in previous videos, is retail traders, right? When they trade, let's just follow simple chart patterns that they use. Okay, they use a double bottom and double top, right? And they look to enter at the triple touch, or the third touch of it. Okay, but what happens? Price wicks below and gets taken up. Okay, this is price grabbing liquidity that is sitting above and below. Yeah, so banks need this liquidity to create this move, and how we utilize it is this is a footprint that the institutions leave behind because they need to come back and mitigate their trade, which is sitting in a negative, because they have to place a sell, okay, to drive price down, and then they can place their buy. But their sell is still in negative. They don't use stop losses, right? So price needs to come down, mitigate it, and then continue to move. And that's where we look to enter. And that is a footprint that we play off. Same thing for a sell, okay? Price, they place a buy to push price, they can grab liquidity, then they place their sell, okay? They're sitting in drawdown on their buy, so they need to bring price back up and mitigate whatever their trade was that they had, and that's where we enter, and then boom, it's gone. Okay, in terms of, let me clear this. A different way to see liquidity is breakout traders. So breakout traders will be looking, so if I draw two trends, okay, this is a bullish trend obviously, and this is a bearish trend. Now for a bullish trend, okay, people are placing sell stops below every single low, okay, because they're looking for breakouts. However, obviously, liquidity is here, okay. Price sometimes comes back to trigger that trade, right, and then comes flying back up to continue the trend because it's grabbed liquidity and gone. And you get that impulsive move, that's a good indication that, you know, the institutions are involved. Because any impulsive move that you can see here, right, as retail traders, we're not doing any of that. The banks are doing that. We're not doing any of that. Okay, so that's a good indication that price is grabbing liquidity. Like here, price has grabbed liquidity from this previous low and then flown, right? Essentially, that's what's happening here. Same thing with this in a bearish trend. You've got liquidity sitting all the way above because people are placing buy stops, right? Because they're looking for a breakout of any of these. However, sometimes you get a wick that comes, grabs liquidity and goes, okay, triggers their trade and then stops them out. Simple as that. Okay, and that's how we utilize liquidity. It's a footprint that the institutions leave behind for us to understand. Our strategy. And that's why our strategy has more theory behind it, because we've got full reasoning behind the trade. So the reason why I took this trade, if we look at the 2 minute, I'll do a breakdown specifically for this trade, by the way, once I've closed it, because it's still currently running. Okay, so price was inside the POI, okay? I took a trade here, and I got stopped out, okay? It was a clean break structure, okay? We had a liquidity wick, taken liquidity from the previous low, and then broken structure, right? So I placed the trade at this open, and I got stopped out. The next thing, it was still within the POI, okay? Same process, we've got the low, liquidity move, break a structure, and then that's where I look to enter. You could have refined it even further. If I just focus on this point, you could have refined it to this 1 minute one, or let's see, 30 seconds. You could have refined it to that. For me, the 2 minute one was good enough. It gave me a good enough stop loss for me to continue and place the trade. So I didn't really fancy going any deeper in terms of time frame than I needed to, right? So that was pretty much the reason behind the trade, and exactly the same principle for pretty much every single trade that you take. Okay, so that's how liquidity essentially works. What other questions were asked? So there's question. Let me have a look. I think that was the main questions. So what I discussed afterwards was what happened inside a candle. Right. So if I draw the candles, okay. So this is going to be my bullish candle, right? We've got the candle open here and the candle closed here, yeah. And these are the low and that's the high of the candle. Okay. Say this is the 4 hour or whatever time frame. It doesn't matter. It's respective to any time frame, right? So what's happening is when price opens, it creates a low, okay, then creates a high and then closes, okay. This is a fairly standard candle. But if, for example, we get a candle where the wick, for example, let's say this down wick is this long. God, why is it going up? Let's say this candle is this long, right? Now, this is what's happening inside. Now, price opens here, right? So let's see, that's the wick, okay. Price opens here. Okay, we've got sellers coming in, okay, and this is where sellers get exhausted, okay. They get exhausted here, and then price comes back up to create this. So price goes from here to create this high of the session. Now, when this wick is fairly long, it's telling us that the buyers are in control, which is why the wick trick. So say, for example, the previous candle, which is sitting here, the wick would be like this. We need to understand that what's happening inside this wick is the sellers obviously starting off to get exhausted. Okay, this is all inside the wick, by the way. They get exhausted, and then the buyers come and take control of the trade, of the move. Sorry, whatever's happening in there. Okay. Now, when this happens, it's a good indication that there's an OB sitting here, because for the buyers to take control, right, there has to be an impulsive nature within this wick, which is why we say there's an OB sitting at the 50% of the open, okay, without having to go to a different time frame to look into it. But when you get the price for doing the other thing, when the top wick is high, right, like this, you need to realize what's happening in here. So let's have a look. So if I draw it like that, okay, when price comes here, right, you've got the buyers coming in, and then the sellers take over. Now, from this big move, this is fairly impulsive from the sellers. Okay, sellers have control, right? So this is telling us that sellers have control. So there is potentially, this is an impulsive move, so potentially there's an OB within that, which is why the liquidity wick, and this is how it essentially works, is telling us whether the buyers and sellers are in control. Now, I don't look at different candle types. I don't know any of the names such as dojis or flying or not flying, shooting star or anything like that. Purely because you don't need to. You need to understand. As long as you understand the anatomy of a wick, you're pretty much golden, right? So if you think about it, okay, we've got this is a bullish candle. We've got the open, close. Okay, price creates the low, then creates the high, and then it closes. When you get discrepancies of creating a long wick at the top, sellers are taking control. When you get discrepancy of the wick at the bottom being long, you've got the buyers taking over. Okay, and that's essentially how you should interpret it. Now, if we look at it in a real perspective, is let's just go in the 4 hour quickly on this. I haven't seen so right. So let's look at this. Look at this bullish move. Okay, look at this bullish candle just sitting there. Right, the sellers are taking over, but what happens? Price drops. Okay, buyers taking over, price flies. Right, same thing. Buyers taking over, price flies. Let's check the bottom. Look, buyers taking over, price flies. So you don't really need to know what type of candle it is. You need to understand that these wicks are very important, and understanding what is happening inside them is very key and it's very good to understand. Now, the next question that was asked is why my volume is there and whether I use it or not. I personally don't use it, but the way to understand how to use it, which is quite interesting actually. So in terms of the volume, I think it has like 60 to 70% accuracy, um, but I'm not too sure. But I didn't really find it overly useful as such. But it's quite interesting to understand whether a move is false or not. And sometimes it works, sometimes it doesn't. But I don't really focus on it. It's just there for me. Um, it's not normally there. I don't know why it is there, to be fair. But how to explain it, right? So when you look at, if you look candle by candle, right? Now, let's have a look at two candles. Okay, let's look at this bullish candle here, and let's look at this candle and this volume, right? So just looking at the body, look at the size of this candle, right? And look at the size of that volume. How is the volume of this candle, right, higher than this? How? It doesn't make sense, right? Because this is potentially telling us that this is a false move and price is probably going to reverse. Let's look at the next candle. Next candle is not far off from this size, but look at the size of the volume. It's pretty much the same, right? So it's sort of telling you that this is an anomaly. Price is going to do something different. Okay. Now I think I had a better example to show you on Euro USD. Yeah. So if we focus on just this section, so let's go to here. Right. If we focus on this section and we're looking at volume and the candle, right? Look at the size of this candle and look at the size of that volume. Okay, it's not right. Okay, if that size, that volume is that big, and that candle is telling you, okay, this is a warning sign, right? This is something that I wouldn't say is overly, like you wouldn't trust that move, right? And if you look at the next ones, look at them. They're roughly the same size. That volume is okay, but it's already giving you a warning sign that something's wrong. Okay, but look at the next candle. This one's smaller, but this volume is bigger, right? So it's telling you this is an indication that something's going to happen. But if you look at the wick, look what's happening. Sellers are in control. Okay, and if we look left, there is a POI sitting there. That's a liquidity wick, right? So price could be potentially reacting to it, and this could be a clear indication that price is gonna drop, right? Generally, there's like a 4-bar rule with volume and candle bar spread. Now, as I said, I don't really use this. I sometimes look at it, sometimes don't. It's not something that I feel that you need to focus on as such, but it's really interesting to understand volume and what the candle is doing. It was a very good question yesterday, and I'll do a separate video on volume and candles as well, just to explain it a little bit more, right? But this is an anomaly, right? If you get a candle like a bullish candle like this, you expect let's have a look for a real move. Like look at these candles, okay? These are clear moves, right? Okay, because volume is supporting it. However, if you look here, you've got anomaly. This is a very small candle, volume very big. So it's telling that price is potentially getting exhausted, right? And that's essentially what's happening here. Price is getting exhausted as price comes to a point of interest. Sellers are taking over. But let's look at the next candle. Oh, I did not mean to do that. Okay, we've seen the next candle anyway. Next candle is bearish, okay, and that's as we would expect given the circumstance of this, what's happening with the volume and the wick. Okay, so the sellers are in control. Now, in terms of using volume, how we can utilize it. For example, if we're looking at points of interest, so say that we've got a breaker structure and we've got this, right? We already identified that this is anomaly because the volume doesn't really react, doesn't really, doesn't really tie in with what this candle is doing because this volume is pretty big, but the candle's body is very small, right? So I don't think that there is any institutions that were involved. This potentially the market makers who's causing this price to be manipulated, right? So if we see what happens next, see if price just violates this point of interest, okay, and it would make sense because there was no one really involved in that move. And if we look at this one, right, this candle and this candle, it does make sense in a way, because if we look at the bearish candles coming for it, these candles fairly same size in terms of body spread, volume is pretty good. This volume supports that, so this move is fairly supported. It was just this move that's anomaly coming towards your point of interest. Okay, let's see what happens next. Price reacts off it. So it can sort of help you determine whether a POI is suitable or not. Again, I don't use it because I don't find it overly accurate. But if you want to look into it a bit more, I will do a more detailed video in volume, well, about volume, just to explain this a little bit more. But that's essentially the concept. You look for anomalies, right? You just look for whether the volume and the candle that it's pointing at, whether it's valid or not. Because look at this one. Okay, it doesn't really stand. Okay, this is an anomaly already. So price is probably going to start reversing soon, right? So if we look at what's happening next, 4 candles, right? Sellers didn't really take over there, but sellers took over here and sellers took over here, okay, which caused a bearish candle anyway. But this move was not supported. Look at the size of these two volume, right? Look at that volume, look at that volume. They are complete different size, but the volume is exactly the same, or pretty much. So it doesn't really support that move. So it's not telling us that this is a actual bullish move. So price is potentially going to start dropping, which it does. And that's essentially what happens. And that's how to read volume and you're understanding the anatomy of a candle. So you don't need to know what you don't need to know the overall names for the candles as such. As long as you understand what the candles are showing you and what's happening within the wicks, you're pretty much okay. So what I've covered today was breaker structure, finding your OBs in terms of risk entries. In terms of finding your OBs, it's very, very simple. So if we're looking at this, right? So price, when I was placing this trade, price was here, okay? Now I know my POI is sitting either, it is sitting at this OB and this wick, okay? It's sitting somewhere in there. I already want to look for whatever's happening in that wick, okay? And to find a risk entry is exactly the same thing as finding your POI. So what you can do is once you mark this out, you can go to any time frame that you like. You can just flick through the time frames and keep refining. Okay, so far I'm still looking at this wick. Okay, so let's just go to the 1 minute and let's have a look what's happening in there. I should have just gone back, shouldn't I? There we go. Let's go. Let's just go to here. Okay, let's go to the 1 minute and see what's happening. Okay, so our POI is sitting now here. Okay, and if you're going to do a risk entry, this would be your place where you'll place the limit. So now that you've found this, you can even go lower if you wanted to. There's no need to. Like, you can go there if you want. 15 seconds, even there. You can place it here. Okay, now you can go to your POI, and this is going to be our point of interest for our higher time frame bias, right? But you can also use this as your risk entry, and that's how you find your risk entry, by doing that. Okay, because if we see what happens, let's just exit out of this. Price would have triggered your risk entry perfectly, and then you could have gone. So you could have had in that risk entry, I don't know what your stop loss would have been, about a 4 pip stop loss. So it's still a solid trade, to be fair. But I looked for a confirmation entry because purely because of the POI that's sitting below. Okay, it's pretty much in the middle of nowhere, this POI. However, it was supported by the 4 hour, the 1 hour. You know, there's POIs. There's a lot of confluence behind this trade, but it wasn't a risk entry purely because it was very impulsive. It was impulsive. However, because the POIs are sitting below, I wouldn't really want to take a risk when I trade like that. I would like it if it was at the bottom, then maybe, but no, not for me. And plus, as I have time, a confirmation entry is better for me. Your win rate is a lot better. So yeah, that's how you do a risk entry, and that's how you find your POI. So you scale down through every single time frame that you have, just to find whatever's clear for you. And as I mentioned yesterday on the call, is understanding that if the stop loss is good enough size for you, just use that OB. You don't have to go any lower. Like for me, I could have went lower on down the 2 minute, but I didn't because I like this OB and I like the stop loss size. It was fine. I could have refined it even more and got a slightly better risk to reward. However, I'm very happy with how this trade is running at the moment. Let's have a look. Yeah, so at the moment it's running pretty solid. Yeah, at the moment it's running pretty solid, to be fair, and I'm not doing anything to it. I was asked about trading stop loss, so I'm going to follow the hourly structures. So now let's create an hourly low. I'm going to wait for a structured break, and then I'm going to place my stop loss below the low, and then keep going from there. I'm not trading this too aggressively, and I've already taken partials anyway, because my first point of interest was this OB here. This price can still, it's broken structure, but price has violated it anyway. But I've just taken partial just in case they get a late reaction. This price can still react to this OB up here as well. But that's how I would trail the stop loss. In terms of other questions that were asked, I believe that was it. The rest we just went through certain setups and how I start off. Essentially, you go through as I make in the video. And a good thing to mention is I don't really mark out my daily highs and weekly highs anymore as such, because I can eyeball it. The reason I talked it in the video is because I want you guys to understand structure, and once you get comfortable, you can get rid of the lines. You don't really need them. For me, it clutters the chart a lot, so I don't particularly like them there. So I only keep the lines on for my points of interest. So how to start off is you start off, obviously, again, this is the video that's already been given out. This is the vertex method. You start off understanding the structure and the trend of the higher time frames. You make your way down, and for me, we've got a bearish trend, as you can see. Breaker structure, prices already mitigated any OB that's there. Then we've got another breaker structure, so an OB sitting within that wick for me. So that's all I'm waiting for. I've set my alert, and I'm not even looking at this trade anymore. So that's how I set up for a trade. Now it's the same principle for any other time frame. So for me, the 4 hour already coincides with the daily. So this is my point of interest. You can look for short-term buys up towards it if you wanted to. That's up to you if you want to take that risk or not, or whether you want to follow the trend. Because remember, although you have this bearish move, you do have this corrective phase, right, before a continuation, potentially a continuation. Okay, because that's what I'm looking to do. If price breaks this, right, noticeably, then we can look for buys. Okay, but that's just following market structure and what the market is showing you. So I hope this video has helped. As I said, I'll do a bit more detail for the volume and candle anatomy. But in terms of break structure, there isn't much to it. Don't overcomplicate it, because the main thing is you should try and keep it simple. Just go for the obvious structures that you can see, and whatever's in between is all minor. That's all you have to remember. And if you've got a bearish trend, if the highs are broken, then potentially a market structure shift. If the lows are broken for a bullish move like this, then you're thinking that it's going to be a bearish market structure shift. Okay. But yeah, that's all that was discovered. That was not discovered. That was all that was discussed on the call last night. And apart from that, there wasn't anything else that was overly that needs to be discussed now at this point. But yeah, so I hope you all have a good week. I do apologize about the actual recording. I'm not sure, but I think I've added a bit more detail in this video anyways for you guys. So I hope this makes sense and clears things up for you.